Well, let's put some of the things the finance minister said in perspective. Joining me is senior economist with DataBank Research, Courage Mate. Thanks for your time this afternoon. So you heard bits of what the minister said. The media review would focus on fast-tracking economic recovery. It's very important during these times of the pandemic. What would that entail?
Well, good afternoon, Daryl. Thanks for having me. First of all, technically, it means that when the minister comes to Parliament, we won't only be expecting a revised budget for 2020, but we'll also be expecting a supplementary budget, because this would constitute new lines of expenditure that were not captured in the original budget to be revised. So you would want to revise the original budget because the assumptions have changed. But then, because there are new expenditure items that will be falling through the budget, you also have to present a supplementary budget for legislative approval. And so that means that we'll also be expecting a supplementary budget this month when the minister comes to Parliament. Okay.
He also makes mention of the fact that this is an election year. Typically around this time, when there's a mid-year budget review, what do we expect government to announce? Remember that we are dealing with different situations now. We are dealing with a pandemic. He also spoke about a massive stimulus package for industries. At what cost to government whilst we try to manage expenditure?
Well, yes, and the thing now is that because of the size of the problem we are dealing with, the focus now is beyond the elections. You need to have an economy after the elections. And the only way you can have an economy after the elections is to focus on the bigger problem, which is COVID and life after COVID. And so it appears elections and the worries associated with winning an elections or not it is in the back burner. But I think that really, if you are able to revitalize the economy and put the economy on the path of growth and sustainable recovery, that in itself, for me, is a vote of confidence, and you need not do much at the polls. And so for me, the focus for me is going to be how we spend prudently to restore growth and ensure that confidence bounces back as quickly as possible. So the elections for me will be secondary.
Okay. We look forward to what the finance minister would announce. But I want to talk to you on another subject that has got to do with inflation for June, as announced by the Ghana Statistical Service. We are told that it declined by 1% from the previous month, and we're getting indication it is because of the easing of restrictions. How significant do you think is this drop?
Well, yeah, inflation declined by 0.1% from 11.3 to 11.2%. Is this significant? I think it's significant, but it also requires caution. It's significant in the sense that after the panic buying and the shock it introduced into the food index, right, we saw a sharp increase in the headline numbers for 2 consecutive months, April and May. And we were all wondering how long the increase would go on. Now, this reduction or slight reduction is significant in the sense that it's giving us reason to now ease our apprehension to conclude that, okay, come to think of it, it's eased. So it means that it will not continue indefinitely. So we can look forward to an improvement or a decline. However, there's also a strong note of caution, because if you disaggregate the consumer price index and you break it down into the food index and the non-food index, the decline we saw was as a result of a sharp reduction in the food inflation. But if you go into non-food inflation, what you notice is that non-food inflation has been going up. In fact, despite the reduction in food inflation, non-food inflation went up. And actually, non-food inflation is going up at an increasing rate. So it went up at a rate of 0.3% in April, went up at 0.7% in May, and now 0.8% in June. Now, if you consider the fact that export prices have started going up, 15% increase in commercial transport fares, then there's also expectation of a normalization of utility tariffs to come. That could also mean that non-food inflation could pose upside risk. So there is also a bit of caution to be applied in the outlook. But generally, it's a positive news to the outlook.
And Courage, for the first time, the Statistical Service brought up the core inflation, which stands at 8.8%, and which means that without COVID, we may have been at 8.8%. How are we supposed to interpret this figure?
Impressive, isn't it? First of all, I mean, I was happy to see that because normally what you just see is the Bank of Ghana publishing their measure of core inflation. How should we look at that? First of all, if you have the core inflation around a certain figure, it tells you the underlying inflationary pressure so that if you knock off those volatile items, it tells you what inflation should be if you adjust for the volatility. So at 8.8%, it means that inflation is firmly well anchored. However, at 8.8%, if you compare it to, of course, this may not be a standardized way of comparison, but if you compare it to the Bank of Ghana's measure of core inflation, as at April or so, it was around 6%. And so if you are having in June core inflation around 8% or 8.8%, it tells you that although underlying inflation is still within grip, it might be experiencing a little bit of upward pressure again. So we also need to be careful as well.
Always appreciate your perspective. That was senior economist with Data Bank Research, Courage Mate. Appreciate it.